Hey everyone, welcome to another episode of ADMAIL. This is Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, welcome to another episode of ADMAIL. I'm Bergman, tax attorney and founder of IRA Financial. And today's podcast, 3 more great questions from 3 super smart individuals, although they all came from social media. So don't really know exactly who these people are, just their emails. But I assume they're super smart. Why? Because they were smart enough to submit a question. So let's get started. This is a really fun podcast because it's short and sweet, right to the point. 3 great questions that you'll get the answers succinctly with some detail, but enough to explore the issue at hand and give you the answer you need. So the first question from Twitter is, I have $75,000 in a former employer 401k plan and need to start a business. What is my best retirement strategy? So that's a great question because it is so general. And I wanted to include it because it lets me get into various different topics. So this is my rule. Number 1, I would go with a self-directed IRA if you are not going to be active in the business. So if you're just going to be passive investor into a business, then the self-directed IRA is your best bet. It's easy, quick, cheap to set up, and super simple. If you are going to be active in the business, I mean, you're going to be an employee, you're going to be working there, your IRA may own more than 50% of it. 2 more options. You can do a loan, so you can set up a solo K for this new business and borrow $50,000 or 50% of your account value, whatever's less, and use that. So if you had 75K, you borrow half of that, giving you, about 37.5, and then you can use that for any purpose. It is a 5-year loan that you have to pay back at least quarterly, and the interest rate now is quite high. It's 8%, thanks to the inflation and the Fed. So, during COVID, the interest rate was 3.25%. So doing a loan was obviously, much less costly from a payment standpoint. But the good news is that 8% goes back to your plan. So you're actually guaranteeing your plan with an 8% rate of return. And then the third, if you're going to need more than 50K and you're going to be actively involved, the Roths, the rollover business startup, where a 401k will own a C Corp, a Corp. You'll be an employee of that Corp. And then the 401k could invest in the corporate stock, which is known as qualified employer securities, and takes advantage of an exception in the tax code under 4975D13 that allows a 401k to buy corporate stock in the adopting employer without triggering the prohibited transaction rules. So a really good solution if you need more than 50K and you're going to be involved, earn a salary, and your retirement account's going to own more than 50%. If 50K works, then the solo K loan option is a great strategy. If you're not going to be active, if it's passive, and you don't need a salary, and you're not going to be day-to-day in the business, then the self-directed IRA works. Now, you could still potentially do a self-directed IRA and be active. You just need to be really under 50%. And then there's some other variables that we would need to explore and dissect to make sure there's no potential indirect conflict of interest or self-dealing types of prohibited transaction issues that could pop up. And another reason why you want to work with a company like IRA Financial, because we have an amazing team of tax professionals, attorneys, accountants that can assist you and make sure you have all the information at your fingertips so you can make the most wisest decision. Second question from YouTube. What is the deadline for doing a Roth IRA conversion? Is it December 31 or April 15? So the answer is it's December 31. So if you wanted to do a conversion for 22, that ship has sailed. That's gone because we are now in April. If you want to do a conversion for 23, you can still do it all the way up until December 31, 2023. Okay, so obviously if it's cash, that's the value. If you're doing an in-kind conversion of stock, it's the value of the stock. Bitcoin, the value of the Bitcoin. Gold, the value of the gold. Now, if it's in a non-marketable security like a private placement or a LLC unit in a private business, or stock in a private business, or a loan fund, investment fund, private equity, hedge fund, that's when you're going to need to get some assistance for the value of the asset. You want to have the valuation as close as possible to the date of the conversion. Doesn't necessarily be the day before. Could end up being a year before. Just need to make sure there's been no material event in that enterprise or that impacted that particular security or underlying asset. Some people use what they paid for if nothing material has occurred. Real estate, obviously, you can go online, or you can use a tax record, or get a letter from a realtor giving you a sense of valuation. But obviously, the most difficult stuff are the private company shares, private placement units, where if there's not a capital raise, you may have to go off the previous capital raise valuation in order to get a distinct value. There are potentials to use a valuation firm that could potentially get you a 10 to 40% discount on the value based off lack of marketability. Doesn't really work for cash stocks or Bitcoin or gold, but it could work if you own a minority interest in land or a fund or a company. The idea is that, hey, no one's going to pay fair market value for this interest because you own 3% of this big company with no management rights. So even though you paid 100, maybe it's only worth 60 or 70. And you'll have to discuss that with a valuation company. But the deadline is 12/31. And the third and final question on today's episode is from YouTube. I do a lot of rental real estate personally. Can I establish a solo 401k for this business activity? How would I know if I treat the real estate as a business or something else? So another really good question. I think I've heard this through a colleague, this YouTube question, maybe the individual called in. So it all comes down to how you treat it on your tax return, which means, is it a Schedule C or Schedule E? Schedule C means it's active business, subject to potentially self-employment tax, Social Security, FICA, about 15%. Whereas if it's Schedule E as in Edward, you're treating that activity as passive rental or passive real estate, not subject to Social Security, FICA, self-employment tax, which is the advantage of being E. But the disadvantage of E is that income is not available for contributions to a retirement plan because it's not subject to self-employment tax. So that's the trade-off. Okay, some people don't care. They'd rather save the tax. They're not worried about retirement. Although if they read that the Social Security system may be bankrupt by 2034, they may reconsider. But what some clients do is they'll move some of the E to C, because you can have some management services treated as C and the rest, the rental activity, is E. So there's a variety of ways that you can maneuver in order to get some money in C, and then that money can be contributed to a solo plan. Technically, if you have a Schedule E, it's not really a business, it's passive. You're not going to set up a solo because there's no business activity. You're treating it as a passive activity. So you'd really need a Schedule C to set up that plan, because you need a business to establish a solo K and not a passive rental activity. So that's the distinction. C, yes. E, no. But you do get to save the 15 or so percent on self-employment tax. You can always move a portion of the E to C, pay the self-employment tax on that portion, and then contribute the rest to a solo 401k. So that's it. Another ad mail in the bag. I hope you guys enjoyed today's podcast. A lot of fun. Really good questions. Some really smart people. Like I said, I'm amazed how many great questions I get, and how much I actually learn from all of you folks who send in super smart questions. And you probably don't think they're that smart. They are. They are, because I'm talking about them, and trust me, I get lots of feedback from people saying, "Oh my God, that was a great question. I actually had the same one. I was too embarrassed to say it, or I thought it was a stupid question, so I didn't pose it to you." Well, don't be shy. First thing you'll learn in law school, if you decide to go, is there's no stupid questions. If you have it, there's probably 30 people behind you that have the same question or more. So don't be shy. I keep it anonymous. I don't go through full names and addresses and phone numbers. So you don't have to worry. It's all about getting everyone the information so we all can learn from each other. So that's it. Hope you guys enjoyed today's podcast. Don't forget to subscribe. It's a weekly podcast that drops every Thursday. Thumbs up won't hurt either. I really appreciate that. Good feedback, always helpful. If you have comments or other feedback, leave it. I do my best to return all comments within 24 hours or so. So don't hesitate. And if you're watching on YouTube, appreciate it as well. Really proud of our channel. 3 videos and a live every week. Plus, you can watch the Adam Talks, ADMAIL, and AdBits every week if you want to look at me for whatever reason and tired of my voice. So otherwise, have an amazing rest of your day. Thanks for listening or watching, whatever. Appreciate the support and take care.